Hey everyone, Stan here. In this video I will share with you a couple of practical tips of how you can actually improve execution of your trading ideas, which you get from either your technical analysis, fundamental analysis, or from the OLTO Trade Mentor, because we also give some suggestions generated by the machine. So first of all, you gotta understand what is on the other side. I mean currency, commodity, cryptocurrency or stock. And there are specific tips for each asset class which might help you execute your position better. Let's go. The first thing that I pay attention to is VIX, which is S&P 500 Volatility Index. What is that? It's basically the price of options for index futures. In case they're moving down, so we see that people are willing to pay less for the insurance, so they're not concerned about the potential meltdown or correction in the market. So they are buying more stocks in this situation. So if we compare the performance of VIX and S&P 500 index, which is SPY for example, we may see that whenever VIX is moving down, the S&P is moving up and vice versa. Well, it's not a prediction. So you cannot predict the market with VIX, but that's basically an indication of level of fear. And in case prices are moving up and VIX is moving down and basically moving to the new low, and if it is below 25, you may say that many bullish ideas will work. We see that all the time. So with sustainable bullish trends, that just happens like that. So VIX is below 25. If it breaks 25, if it goes higher and higher and higher. So we've seen, for example, June 2020, I don't know, September 2020, October 2020. So it was going up. And that was associated with market corrections. So we see the correctional moves in the market, which are associated with these periods. So if you see VIX moving down and at the new low, so possibly you are dealing with the bullish market and many long ideas would work. So in other words, if you go to finviz.com, for example, and when the volatility is low, you would see the picture like that. So most of stocks will go green. So they will grow. So, and in case this market grows, so many long ideas would work regardless of the quality of technical analysis, regardless of anything. They just grow because the overall market is growing. So that's the first tip. If you want to go long, make sure you are supported with the low volatility, with the low value of VIX or VIX moving down. So that's very important. It's not a prediction, so for example, of course, it's not a guarantee that your stock will go higher in case VIX is moving lower and in case it's below 25, but it increases probability that the overall market will be growing, and with that, you will be supported by the main trend. Another thing that I pay attention to is seasonality. What is that? So seasonal patterns aggregate statistical data for the long-term period of time. For example, it might be 1985 to 2014, and it might be 20-year, 30-year period, and they are basically quite reliable. So for example, if you take the seasonal graph for S&P 500 index, you will see that September is the worst month for stocks statistically. And that works like self-fulfilling prophecy. People know about that and they start being very cautious about the market. So they say, okay, September is the worst month for stocks, maybe I should step aside, maybe I should postpone my buying into October, because you see in October 9 that's a dip for the market. It's easily explainable because the earnings season starts in October actually, and when we have October, we have lots of big companies reporting their earnings and basically, within the earnings period, many stocks are growing ahead of earnings reports. So that's another thing. So if you see that you're operating with the worst month, let's say September, and you are getting long ideas, you should be cautious about them at least. So because you would know that possibly the probability of this idea being successful starts to float around 50%. Even though the statistical reliability of this idea might be 70%. And another idea is that in many cases, from a trading perspective, it's much better to buy dips but not rallies. What does that mean? For example, when the market is moving up aggressively, like in the situation in March 2021, of course it would be good if you buy the breakout. I mean, you join the rising market, but in many other cases, markets do not work like that. So they move in the dynamics like showing the high, then showing the low, showing the high, showing the low again. So, and it would be much better if you focus on the corrections, at least temporary corrections. If you wait for the price to pull back for a while at least, so moving down, and well, psychologically it's not very easy to pick the stock which moves down, but in case you have a strong idea, a strong foundation for this idea, so you see the price moving down and then you pick the instrument. So for example, if you get a long idea right here within this window for, let's say, Amazon, well, that's just a random example, so don't treat it as an investment recommendation. So if you get the idea, it would be much better to focus a little bit on the correction, to have some space between your entry point and the previous high, so that you will kind of buy low a little bit, then the market will continue moving higher, so you will buy low and sell high, you will buy low and sell high. That's a trading tip which minimizes the risk of getting bad execution. It minimizes the risk of buying at the high, of getting a gap against your position on the very next day. Well, in some cases, of course, there are no guarantees that the market will grow in case you pick the dip. Well, there are no guarantees like that, but in case you at least wait for some kind of confirmation, you wait for the price to rebound a little bit, so it will give you much better entry point than in a situation with buying at the top. Let's sum it up a little bit. First of all, volatility. In case it's high, market participants will be willing to step aside from the market to take parts of the profits and not take big risk, waiting until certainty gets back to the market. With the stock market, you can measure it with VIX, with the way I was showing you before. With any other market, you can just build average to range and put it to the chart and see whether it's relatively high or low. In case it's low, you see, okay, market participants will be more risk-seeking, and maybe nothing will prevent this market from growing. That's not a rule set in stone, but in many cases it works. Secondly, seasonality. If you are understanding that you are trading within the worst seasonal period of the year, you should take this into consideration, because big market participants take this very seriously. So they decide not to make any new positions when they are located inside of the worst time of the year from a statistical perspective. Well, not every time it works. For example, previously markets were correcting in May, and people got back in August, in September, back in stocks, but now it doesn't work. So basically some big trends happen in June and July for the last couple of years, for the last maybe 2 to 3 years. This pattern is not working, but we're talking about the long-term statistical observation. Last but not least is trade location. So whenever you decide to trade anything, it's better that you pick at least for some correction, not buying at the top. So in case the market hits the high, establishes the new high, maybe it would be wise to wait a little bit until it pulls back for a while. Maybe it pulls back to the 20-day moving average or any other support. And then when you see that buyers are still in control, when they start to step in the market, pushing it slightly higher, you can get back to the market. So buying the dips, selling the rallies. That's the principle, not vice versa. Buying the dips, selling the rallies. Psychologically, that might be tough, I understand, but that's what trading is. You gotta buy low, sell high. Thank you for watching this video. See you in the next one. Good luck and trade well.